Hi guys, welcome back. So today in general the market is up. Dow Jones had an increase of 0.05%, S&P 500 0.15%, and Nasdaq was slightly down by 0.07%. So all the index were slightly up in general and mostly consolidating on the side to be simply below the resistance and above the support. Because right now Nasdaq is trying to push through the gap from February and got rejected yesterday, and right now is consolidating as expected. I think either tomorrow or the day after it should backtest the 5-day moving average around 13,690, which is similar to the closing price today. So I think most of us share the same question today. Why is the market slightly up in general, but my portfolio is down quite a bit? For this, I think you're not the only one here, because when we go down the list of stocks, you really see more red than green. Most of the stocks were down, especially the small to medium cap. And we can see the index of Russell 2000, which is the ETF for smaller caps. It was growing well for the last 1 to 2 weeks, showing signs of reversal, but today it dropped 1.6%. Quite a bit of dropping, but I see it just backtesting the previous support. So let's see if this support at 219 can hold it or not. Today we could see that it was the lowest at 219. If it breaks this support, it would be back down to 213 and would be back to the range of moving sideways in the range, above the support, below the resistance. But for now, it only looks like it has been rebounding and got rejected by the resistance level at 226 and backtesting the support. So the best case scenario would be consolidate here for a little bit before breaking out. So because the Russell 2000 represent most of the smaller caps, because a lot of us are holding a lot of the growth stocks, the smaller caps, tech stocks in our portfolio, that's why, even though the market is up, our portfolio is still quite down. Another thing is the Hang Seng Index. The Hong Kong market was having a rough day also yesterday. After all, it has been closed since last Thursday. So a lot of the news to digest once it opened. So right now it's backtesting the 5-day moving average and got supported. So it has not broken the uptrend yet. The best case scenario would be for it to consolidate on the side below this resistance level around 29,200 before breaking it through. So we can see the PGJ ETF is also down today by 3%. So you see even an ETF, it's down by 3%. So don't be surprised if you see your portfolio dropping more than 3% today. It is exactly the opposite as yesterday. While the market was slightly down or flat, and it went up 3% yesterday. So today most of the stocks that were up were value stocks and some of the recovery. Not all, some. So a lot of people ask me, why were the Chinese stocks down today? But in fact, it's not really only Chinese stocks were down. A lot of the smaller caps and tech stocks were down altogether. So don't worry, everybody is not having a great day today. You are not alone. In fact, if we go to the list of the top growing stocks, actually the number one growth was the Chinese stocks SOS. Ironically, it was the only one that's up by 28%, and all the other ones were not so much increasing. So I think we need to get back to more normal pace, a normal market, where we don't always see a lot of stocks flying every day. And you can see that even growing just a little bit can be at the top of the list already, while we can see a lot of red. So this is the ranking of my own watch list. And when we look at our stocks, most of them are down today, except SOS, obviously. So it was pushed up by 28% today by Reddit. In the morning, we got in this. So we have basically day traded SOS. Yesterday and the day before yesterday, some of our Discord members have taken a position in SOS already, and today we re-enter again at 5.3. Basically took the win of the Reddit and took some profit already. Overall, most of the stocks were down. I see a lot of people getting very frustrated, and it's normal to feel frustrated. And I can guarantee you that you are not the only one frustrated here. Maybe at least 90% of the retail investors would be at this moment, because it was a very long correction to begin with. And when the market rebound and the Nasdaq, it's only 3-4% from the all-time high. And most of our portfolio is still far away from the all-time high in February. So believe me, you are not the only one here. And it's normal that you feel frustrated. And I do think most of the retail investors are frustrated right now. Some of us saw that EH drop 10% again today and thought, is it ever gonna end? Why is today so bad? Why is everything dropping so hard? And ask yourself a question. And you may ask yourself, is EH a really good company? Do institutional investors think it's a scam? Is the short report valid? Etc. All these questions will start popping up. But I want to tell you, it's really not just EH. A lot of the stocks were being dumped like it's worthless, even though it's a great company. I'll give you an example of Tencent. So Tencent dropped 7.5% today. At some point, it was dropping near 10%. While it is the most valuable tech company in China with the biggest market cap, and it is just like Amazon or Apple in the US. So imagine you see Amazon and Apple dropping 10% a day. So don't feel bad if your stock is dropping 10% today, because even one of the FANG, one of the giant, it's dropping hard. And it is no doubt a great company with fast growth, healthy balance sheet, and strategic investment in multiple sectors, not only the gaming industry or the social media industry or the fintech. It is investing in multiple new rising industry in multiple emerging markets. So for such a great company to drop this hard, it should make you feel better if your stocks are dropping hard today, okay? Now let's find out what happens. So it was because one of the shareholders of Tencent, called Process, is selling 192 million shares of Tencent to increase their own cash flow. So this amount of share is equivalent to 2% of Tencent's total shares. And they insist to not sell any more shares within the next 3 years. So for the sale of 2% of the shares, the share price had at some point dropped near 10%. This just tells us that the market is acting irrational right now. It's simply too much selling going on. And we can see that today's volume was the biggest for at least a few years already. So my Discord member had asked me if it's okay to buy the dip here. And I think that Tencent, it's a great company. It's growing constantly at a fast rate. I remember on Chinese New Year, I talked about Tencent by analyzing how they started the red pocket in WeChat and won almost half of the market share for mobile payments. And I think it was a genius move for them to gain such big market share from Alipay of Alibaba in such a fast rate. So that proves they really have the ability of innovation. And I know that even Facebook were looking at their social media apps and products for inspiration too. And the next support is not too far away anyways, to be around 75, or stronger range of supports around 71 to 73. So if you want to buy the dip, you can simply put a stop loss in case the market has further irrational moves. So the big fall of Tencent kind of shows how irrational the market is behaving right now. And I think part of it comes from the big frustration of a lot of retail investors. At this point, I think a lot of people are quite getting sick or already at the urge of losing ration here, or at least losing patience. But the good news is that even though a lot of stocks are dropping quite hard, you can see that most of them are dropping with no volume. You see, during the whole time of consolidation, the volume was very, very low and actually getting less and less. And today, for EH to drop near 10%, it would be normal to see a spike of selling volume, but no. Instead, we just have small volume for almost every single one of them. For NEO, it's a little bit more, but not that much to begin with. Overall, the spike of volume was really at the beginning of March when a lot of people were panic selling and a lot of people were buying the dip. And after that, the volume were really going downward. So you can think about who's selling here, who's buying here. So you can really think about who's really selling here. Same thing with LKCO. I've been saying that every day it had tiny movement, but today it dropped as much as 8%, but the volume is still quite small compared to 1 to 2 weeks ago. The volume had been decreasing for a while. Same thing with ZEP. Same thing with Palantir. Around March 5th, spike of volume, and then afterwards, the volume was getting less and less, while the share price were dropping lower and lower slowly. So we can think about who had been selling recently, especially the recent few days. Same thing with BNGO, spike of volume around May 5th, and ever since then it had been dropping slowly with less and less volume. Even JKS, which seemed to be dropping quite many days, but instead still keeping above the 200-day moving average. I said this is the last chance I give it, but it's still staying above the support. So let's see if it continues to hold this. The reason why it had a nice run up last week was because of the speculation around the Joe Biden's infrastructure plan. But then later on, he announced that it only benefits the American companies, and because JKS is a Chinese company, so that's why it dipped quite hard afterwards. But if the solar sector continue moving up because of the big plan of infrastructure, it would not leave out individual companies like this one. Usually, within the same sectors, companies also rotate. So right now, few of these two American solar companies and the Canadian one also had grew not bad last week. And if this trend can continue, it would eventually flow out to be the turn of JKS and possibly SOL as well. Especially JKS earning is coming up in April, and it had been quite undervalued to begin with a low PE ratio. Right now, the biggest one in the sector is Enphase Energy, and the market cap is 19 billion with the PE ratio of 157, while JKS market cap is 10% of Enphase with the PE ratio of also 10%, around 16. So it's a lot undervalued compared to the other players in the same sector. For now, it has not broken out this downward trend yet, which has started since December. So let's hope the earning can give it a little bit push if the sales have been growing well. Another good thing is that a lot of the stocks like Baby Neo and EH and ZEP and YSG, they both share something in common, is that they had a nice breakout of this downward trend line for a while last Thursday and had been back testing the trend line ever since. If we look at YSG, it's something similar, breaking out of this downward trend line last Thursday and then back testing it every day. Similar with ZEP breaking out, back testing. We look at EH breaking out yesterday and back testing today, right? So a lot of the stocks had been sharing the similar pattern and also dropping every day with almost no volume. So at least we are seeing some good signs here that still can give us hope. Because I see a lot of people getting so frustrated, and I completely understand, but I just want to remind you to only make important decisions when you are yourself, when you still have ration, and not based on emotion or frustration. Because it's very easy to make some big mistakes and for you to regret it later. Like for example, cut loss of everything blindly just to get it over with, or switch to the stocks that's growing high but might risk to cut loss and then get trapped again. Something you might regret or hate yourself for it later on. So if you have thought this through and you have made the decision, then it's okay. But just make sure that you're not making any choices out of frustration, okay? Something to point out is that for WIMI, it's a little bit different than the other ones. The chart is looking not bad. Even though it has dropped a lot recently, when it was running up, it has bigger volume. When it was going down, it had smaller volume. And today it had gone up slightly and it has bigger volume. So this to me is looking better than normally. So something we can pay attention to. And for now, it is exactly below the 250-day moving average. trying to fight against the resistance, and it has been a few days already to be rejected there. So let's see if we can eventually push it through this line. Now that's it for what I want to share with you today. I just want you guys to not give up because you are frustrated, and not make decisions when you are not calm. Even though we're all here getting frustrated together, we are still supporting each other. This is what the stock market does. It's very good at giving people frustration, and that's how we learn and grow to be better for the future. Okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.